Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week, we're covering two common scenarios that arise when employees are working remotely. Take a deep dive into California state tax issues like conformity, the pass-through entity tax, residency issues, and more at Spiedel's Critical California Tax Issues webinar. The live session is happening on August 28th, and you can get details and register at caltax.com. With the ongoing remote work trend, two common questions that arise are, what does a remote worker mean for the employer? And what happens if a remote employee moves out of California, but the employer is still withholding California taxes from the employee's income? Regarding what a remote worker means for an employer, one thing to consider is if the employee is working in a state where the business did not previously have nexus for corporate income or sales and use tax purposes, will the employee's teleworking in that state create taxable nexus for the employer? If so, the employing business may find that they have to file returns and pay taxes in the teleworker's state. The vast majority of states may find that a presence of a non-sales employee in a state will create taxable nexus. Generally, a worker's income tax and payroll withholding are sourced to the state where the worker performs the services or the majority of the services. However, in those states and cities that have adopted the convenience of the employer test, the wages are still sourced to the employer's location unless the employee can prove that they're teleworking due to the employer's necessity. For states that still use a 3 or 4-factor apportionment formula that includes a payroll factor, another question to consider is, will the employee's teleworking in a state increase that state's payroll factor? The apportionment formula's sales factor may also be impacted in those states that still use a cost of performance method to source sales of other than tangible personal property. It's important to know whether the state in which the teleworker is now performing their services is considered the state where these sales should be sourced for apportionment purposes. When all of an employee's services are performed in another state and the employee lives in that state, the employer should not report the wages to California for unemployment insurance, employment training tax, and state disability insurance purposes. This means the employee should not be classified as a California employee for employment tax purposes. However, we continue to hear from tax professionals about situations where the employer has classified the employee as a California employee and continued to report the wages to California even after the employee has moved out of state, sometimes withholding California income taxes and sometimes not. This is a common scenario because having an employee in another state is a lot more work than reporting all workers to the home state. Plus, as we just discussed, it may also create nexus in the other state, meaning the employer should register to do business in that state. This means filing and paying any fees and taxes required by that state. This most likely is why employers don't register. They simply misclassify these employees as California employees. These employees then are left with 3 options. The first option is to request that the employer correct the problem and treat them as employees in the proper state. The second option is to file in both California and their home state and rely on the other state tax credit to reduce the double taxation of the income. Or the third option is to file a California non-resident return, show 0 income taxable to California, and explain the error and that the employer won't correct the problem. We suggest that you attach a copy of the other state's tax return to show that the taxpayer filed and reported the income. Then prepare to argue with the FTB and prepare to take your case to the Office of Tax Appeals and potentially have a very unhappy employer. Most likely, the client will be stuck with the second or third option. Spiedel's Federal and California Tax Update will get you updated on everything you need to start the upcoming tax season, and there are live webinar and in-person seminar options available. Go to caltax.com for details. That's all for this week. Join us next time for another episode of Spiedel's California Minute.